So Mark, for investors and renters, can you just tell me what's happening with interest rates at the moment?
Yeah, look, interest rates, we've had two reprieves in the last couple of months from the Reserve Bank, but there's some talk in the market about the banks doing an out-of-cycle rate increase, which what that means is they'll move their interest rates regardless of what the Reserve Bank do. And that's come down to cost of funds increasing, and so we may, between now and the end of the year, we may see some increases, only small increases though in the market. As far as the Reserve Bank goes, I think it's probably going to be pretty steady between now and the end of the year. Certainly a lot of the data that's coming through at the moment would indicate that the Reserve Bank's probably going to take a fairly neutral stance, but we'll just see those small increases from the banks as they adjust their cost of funds across their portfolios, and so we might see maybe 0.25% between now and the end of the year.
So should borrowers be fixing then? I'm
not a fan of fixing at all, and when you look at the variable rates at the moment out in the market at 6.47 is a pretty good rate, variable rate at the moment. The best 3-year rate that we're seeing is around 7%, 6.99, 7%. So to get benefit out of a fixed rate, the rates would have to increase not only to 7%, but also the same amount beyond again, just to break even. So rates would have to go up more than 1% over that 3-year period to see any financial benefit from it. There's also a lot of things to consider with fixing, that if you're going to sell the property or you need to break out of that loan, there's going to be penalty costs called break costs that will apply, and you lose a lot of flexibility on your loan with a fixed rate. So generally I tend to tell people to stay variable if they possibly can, and ride the waves, because it's very difficult to come out in front when you fix your loan. So best advice is really just to stay variable.
So based on all this information, is there any final tips that you want to leave?
Look, for investors, we're seeing rents starting to go up again, and we're starting to see some incremental increases. Vacancy rates, as no doubt Anthony and others will say, are still very low, so there's still plenty of demand in the market for rental properties, which is going to keep rents ratcheting upwards. So the yields are starting to recover as well, so units are actually getting a bit better yield at the moment than houses. So whether you choose a unit or a house, me personally, I prefer house, because you've got the land component, which is where the real value is. So I still think property is one of the best investment classes out there. The share market is really getting hammered at the moment, and it's very unstable, and I think it will remain unstable in this sort of global economy while it's still very tenuous, and the US potentially looking at a double-dip recession. Europe is a bit of a basket case at the moment. So I think the share markets will remain pretty volatile. So property is I think one of the better investments around at the moment.